morning, everyone, and welcome to the European crossover webinar. And we are seeing indices move higher. A couple of reasons. One of them I just saw now about mergers and acquisitions coming out of Europe, but also the talk about here in the States where more and more companies are now requiring that their employees do get vaccinated, and also robust employment demand with wage increases is actually also going in, and at least the market sees that as spurring that on. So that's where we're seeing this. At least I believe we're seeing this push higher. And this is post the Amazon weaker earnings that we saw, or disappointment, and yet nonetheless we're still pushing higher. And I thought you get the close on, as Amanda likes to say, the Friday melt up. But it did look like we would then probably run out of gas as we come to this week. But we've actually, you're looking at the Nasdaq, we've even pushed even higher. You can see we had this little weakness right at 15,000 in Asia. We barely pulled back a little bit and reassert ourselves. Came up here to the 78%. You can see here at 15,025 and even 15,034. This level here. You see what I'm getting that. And nonetheless, we're still powering ahead. So I guess the confluence of both of those things. The only thing is that I did see out of Florida, they hit a new record. They have of people in hospitalization due to COVID that exceeds the record in July of 2020. So they are really in bad shape. I'm thinking, okay, well, that's probably going to be a dampener. But right now, I think the European news is even kicking it up this extra step that we're seeing here. So we shall see. Now, when we come in tomorrow, not tomorrow, but in the States, we do have ISM. We do have manufacturing PMI, 9:45 Eastern, construction spending at 10 a.m., and then ISM manufacturing also at 10 a.m. So we're going to start out with a little bit of a bang as far as data. So we'll see how that goes and plays out. That will also include ISM new orders. So that probably would keep us on the bid until then. Now, at the end of the week, we'll get U.S. employment data, which are also expecting strong numbers. That probably will provide an underlying bid to the market. I know that China's data that came out was a little bit weaker than what they expected, but it's still, I think, above the 50 threshold. So anyway, that's where we stand here. We'll take a look at on the SPOOs. Also doing relatively well. Pushing against those highs again. Crude oil was interesting. Crude oil went right to our secondary level. We just came up just a tad bit short. Remember, we had 73.91 on our bias chart with a secondary level of 74.32. The high was 74.23. So we missed that out by 9 cents. I mean, missed that as far as what that tagged. I didn't even notice it. I hadn't even really looked at it. Was busy Friday. I thought when they did come out with the micro crude, I was thinking this is going to be a lot of opportunities, and I've only looked at crude maybe a couple of times since then, and this was a pretty good little move there to that, as I mentioned, that 74.32 area, and we had talked about that before when we said that if the market got above that 72.53, what we were looking for. So that pretty much came in line, but wasn't anything that I was playing in, but certainly from a technical standpoint, that came to fruition on that break of the 72.52 that the market had been pushing up against. Taking a look at gold. it paired back on Friday. We're back actually into our support. Our bias chart support today is 1812, and beyond that would be 1802. But this 1812 is a pretty decent little area here. We'll take a look at the currencies before we jump on into those. Look at the euro appears to be a bit firmer after that's pulled back on Friday. Oh, thank you. Excuse me. And take a look at the cable, just a tad bit firmer, not much to say on that one. And Aussie, which never got its real legs off the ground, did pair back, but we're holding above what is going to be our support, or at least our initial support. And dollar yen trading in a fairly tight range here. And the dollar index, same thing here, just a tad bit weaker. So we're going to move into the analysis for the bias chart. So the euro closed negatively on Friday, but not before posting a hammer bottom on the monthly, closing slightly above the prior month. Resistance for the week will be 1924/39. That slash never comes up. With support at 1824. So we'll take a look at the monthly. And you can see here we did post a bit of a hammer here. It closed just above where the prior month had closed. So positive hammer bottom. And here we are. So we were, you saw about a 4-day rally before a little give back on Friday, but as I said, not before closing month out with a positive hammer bottom. And we'll go back. So 1824 and then 1924.39. And you can see right here, we're coming right here with this 1924.39. That's the area going to have to get above. I mean, you can look in the meantime, we'll probably just meander around here. They did go and stop right here. If you look at this wick here, that's where they ran out of gas right there, just above 119. But this is where the rubber will meet the road. Besides that, remember, we finally got above that 1875. But this is the next threshold they need to get above. And so we might poke our heads in this zone here, which isn't much of a zone. It's only 15 pips, but you can see right there where this will be the key area going into non-farm payrolls at the end of the week. We'll need to make a move if it gets up here, if it can get beyond that. Take a look now at the cable. Also looking at cable on a monthly. You can see here, same thing. Positive hammer. Let's go move back into the daily. Cable sold off Friday, closing sub 39, but like the euro, managed to post a positive hammer bottom on the monthly. Support to start the week will be 38.59 with resistance at 39.37. I think we had this on the 2-hour chart where we were showing that. Yeah, there's 38.59. Just wanted to post where I was looking for that support. And resistance is going to be 39.37. I'm not sure I put 39.37. That's kind of tight. Doesn't make any sense. Hang on, let me take a look at this. Yeah, even if you look on a 2-hour, I don't know how I came up with 39.37. Let's take a look here. Look at the 2-hour. Probably meant that initial, which is, you can see right there, 39.47, not 39.37. 39.37 is coming out of nowhere. This is still bearish. Well, we're going to have to stay in here for a few days to stay above this area here, 139, to say, okay, we're now in a range, because we've come off those lows, but this market is still bearish. We're going to move in now to the Aussie dollar. So the Aussie sold off on Friday, which capped a lower monthly close, sub 74. Support to start the week will be 73.20, followed by 72.87. So 73.20. And if you remember, 72.87 is that old support area that we talked about. Oh, it's going there. I'm not going to bother with these other levels. And we actually we eventually got down there. We got to 72.89 before finally bouncing. And resistance is going to be that 74.27. Now you can point out, well, there's some here right at 73, maybe 95. Well, where the rubber is going to meet the road is 74.27. So if we get this non-farm payroll, this is where they'll blast to and where we'd have trouble. Anything else, we're just diddly-dalling, in the middle, so we're just dawdling around there. You can push up to 73.80 and fall apart. You can push up to 73.95 and fall apart. So it's not going to make any difference until you really get to 74.27. You can see right here on the 2-hour, the Nasdaq is forming a bit of a greystone doji here. And you can see right here, the most volume that's been traded throughout this since the opening of the electronic session is right there. Right there, 1540. But we do have, as I said, data this morning. as I mentioned, we've got manufacturing PMI. That's going to be key. We've got ISM manufacturing, construction spending. So this thing probably want to still keep that bid until then. Moving on to the dollar yen. So the dollar yen posted a positive close to finish the week, yet a near dark cloud cover for the month, suggesting there's more downside to go. So you take a look here on the monthly. That didn't look good at all. Well, actually, that was a dark cloud cover. Actually, a near bearish engulfing, I meant to say. But it does suggest that we can move lower. But we did close higher on Friday. Support to start the week is going to be 921, so we're keeping it pretty close. 921. Followed by 860 on a sustained break. And there's our 860 down here. I posted that here. This one coming up with 860. Actually, that's wrong. That's still above 9, but it's right in here. Click on it. There we go. Okay. Right there. So the touch is coming off of here. Right there. So on a sustained break of that 921, we're looking for 860. And might as well tag this here. That will be ahead of this going to NFP. And resistance will be 1010. Comes in right there. So 1010. Overall, still bullish when you look at how we've come up. And onto the cash dollar index. Dollar index, after a sell-off encompassing the prior week, saw a positive daily close on Friday. So what I meant was that probably didn't come out the right way, but I'm saying is basically this thing just sold off the entire freaking week. Look at that. Finally, at the last moment, it decides to make a turnaround. Saw a positive daily close on Friday. The monthly close looks suspect, and we'll take a look at that. Look at that. There you go. The week's a little bit too long down here to say that's a gravestone doji. But, and generally not going to get that as soon as we just barely come off a bottom. Now, these are monthly. This is a monthly chart, but nonetheless, it does put the onus on the bulls then to go and improve themselves. Support for the week will be 91.50 with resistance at 92.40. So we've got some wide ranges because we're going to be dealing with NFP, and might as well cut to the chase. We do have some support here at this 91.66, but there'll be 91.50. You can see right across these wicks. Right there. You can even see right here. Here's these wicks at the top. And generally, I don't go by wicks, but as I mentioned, if you get a lot of confluence, so you can see where they're looking for you. Break at this 91.66. Look at the top of this wick. That's 91.43. The bottom of this wick here comes at 91.48. And these wicks here come in at 91.50. So, I guess we can say 91.47 just to even that out. And on the upside, 92.40. Once again, we can just dawdle around here, but it's 92.40 when they're finally going to start to see some actual. And I'm going with this wick here and this body. You see that? And 92.40. Overall, still bullish. Retains a bullishness bias. And moving on to Bitcoin. This probably seemed a little bit of a stretch last week, but lo and behold, did we get there or we didn't get there? Yeah, we got there. So there's that 41,311, and we since faded back from that, but that seemed like, well, that's a little bit of a stretch there. Doesn't seem like we're that close to it, and I'll be doggone if we didn't go up there and clank the bell. So Bitcoin finally reached the resistance level of 41,311, reaching a high of 41,622 before paring back to 40,000. Resistance to start the week will remain the 41,311 with support at 39,563. And you can see here, I'm keeping it pretty tight. There's that support, 39,563. Not really paying too much attention to Bitcoin. I mean, it languished here for the longest. We remember our bias chart support, we just missed it by $99. And then we moved up I think it was like $1,200 after tagging it. And then we finally got this move here from the prior weekend. They kind of dawdled with it. You can see on the 2-hour chart, this is a beautiful gravestone doji. If the wick were longer, you could say a shooting star, but no gravestone doji. And you can see quickly drop back. And then we just spent the whole week just meandering. Before we finally got up to that 41,311. Got above it to 41,6 something, but you can see a quick fade back. Moving on to the S&Ps. I thought this would have struggled a little bit, but once again, I think it's that news that with all those, I saw that being posted by Mr. Top Step. Let me see here. Let's see here. It's jobs data expected to show continued strength. Economists are forecasting that Friday's July labor report will show another strong month for jobs gains and a new pandemic low for the unemployment rate. Vaccine mandates kick in as Delta cases rise. Public workers in California and employees of New York City public hospital work networks will be subject to test or vaccine mandates starting Monday. You know, a lot of firms, financial firms, come back. They're now requiring, not messing around, no more of this. I've got my own independence. Screw your independence. You're either going to get the vaccine or get the hell out of here. So basically, that's it. So now we're seeing that now, and vaccine mandates kick in. I saw that part, and then so like I said, I think that's what started us off on this solid footing as we came into Sunday. And then I saw on here that it said a lot of kicking European equities as a lot of merger and acquisition or M&A frenzy starts. So that kind of kept the ball rolling higher. And then to boot, as I said, we've got that key data coming out. So we'll see how that plays out. So S&P futures closed sub 4,000 following the induced sell-off at the hands of lower than expectations Amazon results on Thursday after the cash close. Resistance to start the week will be 44.07 with support at 43.01. Well, heck, we're already above that. Look at this thing. So 44.07 was key. That was key on the way after we broke Amazon. 44.02 was key, and we struggled a little bit with 44.02 if I remember correctly, and then I think they punched a little bit higher. I wasn't paying that much attention to S&Ps, but 44.07 was our key level on Thursday, and I think we got to 08 or 07.75. So it's still 44.07, and then beyond that, which actually we are beyond that, we actually have to be the highs. So let's go back here. Holy smokes. 44.22. We're supported 43.81, and we're still well above that. So let's take a look if we can get something closer. Yeah, right there, 43.88. Pretty amazing considering, the disappointment and how high we are after Amazon, and then we just come right back. Take a look at Nasdaq. Well, here we are pressing up again here in Nasdaq. Resistance. 15,038. That's a pretty key level right there, too. Look at that. And push it up a little bit higher for the close. Hold on, 15,039. There's a 36, remember, from last week. Well, actually from Friday. So 15,000. Oh, but I'm wrong. That was 14,936. Holy smokes, we've thrown another 100 on that. So, yeah, that was just shows you how much we can come back. There's that key 15,077, which we did tag last week. And let's see. Well, you can see right here the value area high here at 15,056, which they did get to the high today's. It's right at exactly 15,056. That's today's high is 15,056 and a quarter. And then the POC here is 15,102. And then we can change this to RTH. That's 15,051 from the other day. And the initial balance high from Thursday is 15,078. That would be the real push right there. 15,113. You see some good confluence from here, 15,088 to value area low, and up to here to 15,107, and there. So you got a zone here essentially at 15,080 to 15,114. And 15,101. Let's go 15,056. 102. Support. We got the value area low from Friday, which is 928. And then you've got the POC from here and value area and volume point of control at that point, which is 14,921. And these two lows here come in at 14,903. Let's just call it 14,905. Now moving into gold. So gold paired back on Friday, but the monthly chart suggests a struggle to move higher despite some short covering. We'll take a look at the monthly. And this is a D futures. Oh, yeah. We moved a little bit higher here, but so gold paired back on Friday, but the monthly chart suggests a struggle to move higher despite some shortcoming. Resistance remains 1848 for a breakout, which supported 1812, followed by 1802. So remember, 1812 was that key level we had before on the way up, before 1818 was that VWAP. So 1812/02. And the upside, well, 48's a push now, so got to be realistic. And so it's right now it's 1824. Well, we can take a look here, see if we see anything here. Let's go to that's why I didn't want to use the profile chart that I have for the Nasdaq, because look at this, it took a little while to load up, and I don't want to be messing with my Nasdaq profile. There we go. Okay, yeah, you see 1824 here, although I don't like having that midpoint on there anymore. Hold on. To figure out where I put that. Anyway, if we need to remove it. So the value area low here was 1826. Yeah, 1826 here. So it's going to be 1826. And then moving on to crude. So crude missed a secondary resistance bias chart level by 9 cents, topping out at 74.23. Resistance to start the week would be 73.90 with support at 73.17. That was a little bit too close to go that close, 73.17. So did dip 72.80. We're back at that area, 73.17, but that was a little bit too close to have for crude, as much as crude, as volatile as it can be. So this is a real key support right here. You can see the point of control there, the pop. There's where they went to, 72.76. I didn't bother to look at the profile, but that's it, 72.76. That's where they're going to go to. So that's what it should have been. Oh well, 72.76. And resistance I had for, I think I said 73.90. 73.90. We were up here at 73.97, so Mox next will go 73.90. Which was the initial bias chart resistance, which was actually 73.93. So there's the bias chart for today. We'll get that posted. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room. Oh, Amir wants to look at natural gas and platinum, so we'll take a look at that real quick. Okay. Key level right now is going to be right there, which is 405. And take a look on a 2-hour chart. You can see right there. You see here this little wick here, the wick, and then the body there. Probably pretty obvious, but it's right there at 399.8. And if we do get beyond that, look at this reaction on the bottom for this wick there. That comes in at 404.8, which is where this market ran out of gas, and we stood right there before we fell apart. See where the body was? So it's 405. So it's 399.8 and 405. And then for platinum, Boy, it's under some stress here. Key level on the, at least initially, is going to be right there, 1036. And this market does look under some pressure. Take a look at that close on the monthly. Yep, it does look under pressure. They tried to hold it when they tagged this area here. You see that? They took some stops out, but they defended it. So for now, it's 1038 support. Well, that's it. We're going to move on, and thanks for joining us here in the European Crossover webinar.